Hello and welcome and Happy New Year to one and all. And as I say, I wish us peace, health, and good long life. And then the rest we shall battle for. Now, isn't it amazing that just before Christmas, our Christmas present from the state was an increase in utility fares. And then right after Christmas, our New Year present is an increase in taxes. I think it's a bit on the harsh side, if you say. But then one will say, as a country, we are looking to go forward, and therefore we need to develop with regards to roads, hospitals, schools, whatever. Where are we going to find the money for? So whilst we are complaining about too much taxes, where else do we get these schools and roads and everything from? So maybe we have to be taxed. But since Gorging is big, as we say, we have a Gorgisberian economy where we just dig up the soil and sending away, or pluck up the cocoa and sending away. There hasn't been any major attempt, or by maybe a champion in Nkrumah who did something. Each and every one of us, we are just so much in a hurry to send away our primary or our raw materials. What is it that we're going to do that will level things out, that we eat what we grow what we eat, balance our CD and trade deficit and everything, so that we can live the Ghana that we want? And that's exactly what we're going to talk about today. Now, this is a show which I feel there's going to be part one to a lot of parts going forward. We are discussing the economy, taxes. It seems to be there's a 30% bracket who cannot escape, and therefore every given time they are like a sitting duck. You always have to tax them. For a country that has over 14.5 million people on the voters register, isn't it ironic that there's only 1.52 million people who are registered to pay tax? What are the others doing on the voters register? These are some of the conversations that we are going to have today. I'm going to take a break. When I come back, I'll introduce my guests, and these are people who are going to talk tax and economy. My name is Nana Sakwao, and this is PM Express. Don't move. Well, we are talking about taxing our troubles away. And that's what we're going to try and find out if it works. Indeed, if we can tax our troubles away, we are in trouble. And we have always owed. We've never been able to make as much money as we need within the country to sustain us to the end of the year. So we'd always have to go outside and borrow money to, basically get enough chop money till the end of the year. Now, we're just trying to reduce how much money we go out there to borrow. And how do we do that is the ones who are in the formal sector get taxed a bit more, so that instead of going to borrow maybe 10 cedis, you go out there and borrow 7 cedis, which is better than the 10. And that's how we're doing. But how best do we do it? Do we do it by cutting expenditure, how much money we spend within, or do we do it by taking money from people who make money within the system? And these are the weightier matters, if you would ask me. And with me in the studio is Abdullah Ali Nachia, who's a managing consultant and a tax legal consultant as well, managing consultant for WTS Ghana, and a tax legal consultant. He's also a lecturer at the law school and University of Ghana. And with me, well, you're welcome. Thank you. First time on the show. Traditionally, you see. And then I have my brother here, Joe Jackson, Director for Delix Finance. Joe, you're welcome.
Thank you, and Happy New Year to you.
Happy New Year to you too.
Your viewers and listeners all across the globe.
Sure. And there's lots of them, and I'm sure they are waiting to see if indeed we can tax our troubles away. But let me come to, let me start with you, Abdullah. We heard that they were going to, I think it was the 23rd of December, there was a law passed that for every investment we make, the profit we make on that investment, 1% of that will be taxed and be given to the state to build us more roads and more hospitals. it was not accepted properly. I mean, one would say it's only 1%. I mean, if you made, 100 CDs, what's 1% of 100 CDs? But it wasn't received well. Let me start with you. I mean, number one, what's your expectation? Because, I mean, I think it's just 1%.
Well, I think that 1%, people look at it as just a simple percentage. But if you look at the numbers you'll be dealing with in terms of the law of average, it will be significant. For me, the issue is not so much of the percentage, but the rationale for why it wasn't being taxed in the first place. The idea, to me, is to create the savings and investment habit in individuals.
Okay.
We should note that the 1% is on payment of interest to individuals. Corporate investors are already paying tax on their earnings as investment income. But if you come to individuals, the idea is to encourage the savings and investment habit. And economically, savings is what translates into investment. Yeah. If people invest, then the financial institutions, DELEX and the rest will get the money to loan out, also charge their interest, and the economy moves on. So for me, if you start to discourage savings, then it will affect investment and it will affect economic growth. Secondly, it's going to also force individuals to find other means of investment. The critical one being holding their monies in foreign currency, so that when they go and exchange and are spending, there is no tax on it. So you move them into a kind of shadow economy to go and make worse our deteriorating exchange rate. Thirdly, you will be expecting the financial sector to either acquire new software or invest in upgrading software to be able to track and tax every single individual investment, because the maturity dates are different. The types of savings instruments are different. Treasury bills, fixed deposit, savings account. So I think that a combination of all these factors makes the withdrawal, the suspension, and ultimate withdrawal a well thought out move by government.
On the subject of ultimate withdrawal, the Ministry of Finance released a press release today for immediate. This is for immediate release. Implementation of the Income Tax Act 2015 Act 896, and it says following the passage of the Income Tax Act 2015 Act 896 in September 2015, government has taken note of the concerns of the taxpayer and the general public on some provisions of the act, especially those relating to the withholding tax on the provision of service and the payment of taxes on interest paid to individuals. It goes on further to say the essence of the withholding tax regime on services is to improve tax compliance. It's not a final tax but a payment on account. Therefore, the increase on withholding tax on services to 15% is to encourage taxpayers file their returns, after which they will be entitled to a credit for the amount withheld. Furthermore, the Act allows the Commissioner General to grant exemptions from withholding tax to compliant taxpayers. The Ministry of Finance has therefore directed the Ghana Revenue Authority to implement these provisions. Proposals have also been submitted to Parliament to review the rate. On the issue of the imposition of a 1% tax on interest earned by individual, government has already submitted proposals to Parliament to reverse the position, and it goes on. As to permanently forget about that, or what do you mean by reverse the position?
To me, reverse the position means that with effect from 1st January, the tax is supposed to have applied. But to reverse means you may have to repeal that provision in the enactment. That is my take on that. Because it is not an issue to review. If it was to review, you may want to size up. Because there have been debates that why don't we consider as a nation a threshold beyond which the individual will be subject to tax. but that would have to be through stakeholder consultation and a well thought out policy. So in the interim, reversal would be to repeal it, pending the way forward.
Let me stay with you. I mean, this is something that was passed. I mean, I'm sure it must have gone through the mail to get passed on the 23rd, and then by 4th of January, say, no, we're not going to do it anymore. I find it a bit strange.
That is where I believe then the consultation was not that wide. Because as we speak, until the law came out, some of us in sectors like the Institute of Chartered Accountants, the Chartered Institute of Taxation, the Bar Association never came across any of these in terms of a consultative process saying that this is what government is intending, any views, any proposals that will make it work better. Whatever may have come out would have been only to inform. Because the first time of announcement was to inaugurate it, and I kept saying that it's just like outdooring. You are not invited to the indooring, but the outdooring you'll be invited. So that was the comment I passed at Alicia when they came to outdoor the newborn baby, the Income Tax Act 2015, Act 896. So I believe that in modern tax policy making, there should be extensive consultations. In South Africa, they have a permanent commission, the Tax Review Commission, headed by Justice Dennis Davis of the Court of Appeal. They are a standing commission that is there. Whatever government intends to come out in the tax area is given to the committee, is publicized, stakeholder inputs are made, meetings, workshops are held, and they come to a consensus to know what rate to apply, when to impose it before it comes out. Wow. It's not in a situation where, like you said, after Christmas of high tariff rates, then you wake up with a New Year gift of a new Income Tax Act. Then, of course, the idea for me for consultation is not necessarily for any vocal group to thwart government efforts. If indeed their proposals are a thwarting device, of course, you could ignore it and proceed. But then they are positioned to revise their business plans, revise their activities for the coming year, taking into account what they anticipate. Because the idea is the businessman, or what he or she needs is certainty in the tax laws. As for the new tax law, of course, it's welcome because the law we applied has been on for 15 years. Internal Revenue Act 2000, Act 592. Dynamics in the economy have changed. New sectors have opened up. We didn't have oil and gas. There's now oil and gas. We didn't have the telcos. Now we have the telcos. A lot of gambling. We didn't have super bet, safari bet. Gambling has come in. So you find out lotto winnings are now going to be taxed. So the reform is in line with tax reforms generally. But the specifics of introduction of new taxes and rates is what is of concern to most businesses.
Joe, let me come to you because, I mean, I will bring my money to you and then you tell me, you know, how best it is to invest and everything. I mean, but would 1% make a significant change in the average investor to say, well, forget it, man, they're going to charge me 1%?
Well, 1% is a significant amount. I mean, the investment business is so price sensitive that 1% is enough for someone to take his money from one institution to another institution. 0.5% is significant enough. So what you have is that what you had was a situation where the tax was acting against certain parts of our economic principles, which is one, we want to bring in inclusion, we want to increase the savings rate, and bear in mind that this particular year, the government has a burden of trying to raise even more money domestically than it has had to do in previous years. Now, at the same time saying that you are taxing the investor, what signal are you passing to the market? Now, somebody has to pay the cost, right? And so the investor is going to look at his money and say, whoa, if I give you this money, I get X amount. Now you have made it X minus Y. Well, I'm now going to ask for X plus so that I'll make up the difference with the Y. So all it was going to translate in is going to be higher rates to buy money or to pay out investors or to compensate investors for bringing their money in. That was going to be a challenge. When you juxtapose that with the fact that in any case, interest rates in the US have gone up. And so, all things being equal, we're going to have a harder time attracting money into Ghana and preventing some of our citizens who have the economic power to keep their money in dollars. It seemed to be a massive contradiction. And as my colleague and friend Alina Chia said here, I'm sure there was not enough consultation, to put it very mildly, because the massive outcry from every part of the economy, from the doyens of the financial sector, all said, what are you trying to achieve here? I'm not surprised it's been reversed. It makes a lot of sense to reverse it. But fundamental is this: we have to find new sources of money. And we cannot keep killing this goose that lays the golden egg. There's only a small section of persons in this country who are actually contributing to the tax revenue that the government gets. And all we do is to slap on one tax and slap on another tax and keep slapping on the tax. So one day, this goose is going to go comatose from too many slaps. It's as simple as that. You said it in your preamble. You said only that small 1.5 million people. And even that 1.5 million, listen, a lot of them don't even pay that much tax. A huge amount, the real people who make a significant difference in terms of persons in this country, may not add up even to 1 million, may not add up even to 500,000. And that's the bottom line. Some of the things we should be doing and looking at from when you sit on the outside maybe sounds too easy. But if I had my way, I want to see you have a tax clearance certificate before you register a plot of land. I want to see you have a tax clearance certificate before you register a car. I want to see you show each time you want to show that each time you acquire any asset and you require the state to be part of the registration or identification and to show ownership, please put forward your tax relic. Let us give everybody who's hiding their revenue an incentive to bring it into the net. That's step one. Then let's find creative ways of getting taxes out of those who are not in the net at the moment. But if all our response is all the time is, you see, we are taxing the same group. If the tax net was widening, life would be a little bit easier and easier to explain and understand. But what do? We're taxing only those people who are in the same little bracket, those who are paying payroll taxes, and payroll taxes form a huge chunk. Then all those organizations that are clear and are regulated in one form or the other. There's such huge numbers of companies and enterprises and businesses that are just under the radar and flit from one company image to the other. Today they are Kojo Mensa Limited. Tomorrow that's wound up. And the next day they are Ama Mansa Limited, and so on and so forth. And they never pay tax. If you ask me, we have to pay tax. They say the US, they'll tell you the only two things, sure things for a man: taxation and death.
Whether you like it or not, it must happen.
It must happen. We must pay the tax. But truly, it is upsetting that one, some of the taxes are not well thought out. Some of the taxes are inimical to the actual process that we have. Just today, I was talking to a gentleman from Gapoha who says, we've been trying to attack goods in transit so that instead of using the free port in Togo and the other free ports, they come through Ghana, we get some revenue, we provide employment for our drivers and our vehicle owners, etc., as they cut these things up north. Our port gets busy, freight rates go lower because there's a lot more traffic. Makes a lot of sense, doesn't it? Then we go on and we slap a tax on goods in transit. So when you slap that tax on goods in transit, what are you telling us? You see, and so when my colleague here says,
coming here, these are goods just passing.
Just passing through. So you, at the same time, you wonder, is there somebody just sitting there saying, what can I grab? What can I tax? What more tax can I grab? Rather than a well thought out process that makes sure that all our plans, everything we do, are in alignment.
Let me come to you, Abdullah. With regards, what percentage of our economy is outside of our tax bracket? Is there any? Do we have a figure or a guesstimate?
We've had a figure right from last 2 years, when the head of tax policy, Dr. Edward Lavisia, mentioned that only 2 million out of the 4 million tax-paying public are paying taxes. So, of course, with the census and all changes in the economy, this figure would have varied. But in all, it means half of the tax-paying population pay tax. So in agreeing with my good friend here, if we want to widen the tax net, two things. One, we need to first make sure that all those in the tax-paying bracket pay their taxes. Because if half are paying now or are captured, then if we get the other half, we would have doubled our domestic revenue mobilization. It is only when you finish with that. I always use the example.
So literally 50% is outside.
50% would be outside from the statistics. Now, I give the example of going by the beaches. If the fishermen go out to sea and they don't get enough fish, they don't rush to CCT to buy nets. You find them at the beach mending the nets. That is what we expect now. Can we look at the tax net, plug the loopholes, and make sure if it's 4 million tax-paying population, they are all in there. If we are not getting enough, then it means the net is not wide. That is when we need to buy a bigger net.
You see, I always use the voters register to look, because we have about 14 million people in there, so presumably they should all be 18 and above. And 18 and above, okay, fine, 18-year-old maybe in school, but it means that there should be a lot more people paying tax.
A friend was advocating that why don't we then move and say no tax clearance certificate, no vote. It should be one of the criteria for you exercising your franchise, because you are voting for somebody to come and manage our public purse.
So you must have some.
What is your contribution to that purse for you to determine who should manage that purse? Then we'll be moving on. As he rightly mentioned, the tax clearance certificate is required for most of the purposes he mentioned, registering title to land. How are the institutions ensuring that that is produced? So the issue is monitoring. How are we letting the existing structures and systems work? People are registering land. They don't even have the tax clearance certificate. So how did they earn the revenue to purchase the land? If it was gifted to you, at least the tax clearance would stay, because we have gift tax. So you should have paid the tax on the gift if it is not in the exclusion list, and show the tax clearance certificate that I got this plot of land from an uncle. It's exempt from tax, and so I'm coming to register it. Then we are moving on. Because ideally, I keep saying, you shouldn't go into any transaction when you don't have a taxpayer identification number. That is your license to earn income in this country. Has everybody got a taxpayer identification number? Because if you don't do that, where we'll be losing revenue? One, employees. Some employers will have employees, deduct their taxes, they won't pay over to government, they will keep it. We don't have the strong monitoring mechanism to track them and hold them accountable. Some employees are complaining. They take our social security, but it's not paid. What are the mechanisms? And so we look at that for the employees. Now we come to the corporate world. Who are those winning all the contracts? Government is the biggest buyer. Government is the biggest employer. So if you cannot get any government contract if you don't have a taxpayer identification number. In fact, when they advertise for bids, the requirements are a tax clearance certificate, a social security clearance certificate. All those are there. How are we following up after they won the contract that they've come to pay the tax due on those contracts? So first and foremost, the monitoring evaluation needs to be done. We lock up all the loopholes that we have. Like you rightly said, you don't have a tax clearance certificate. Today, the year has started. Today, Monday. I'm sure if you visit all the DVLA points, you'll find them in queues. Change of ownership of vehicles. Can't we track and see who is earning what and who is buying what? We see all the flashy cars you can find on the streets of New York. Here in Ghana, you meet them in traffic. What is the value of that vehicle? And so it should tell you the income stream or the status of the person in that vehicle. How is that tied to the person's tax clearance certificate? In other jurisdictions, they have categories of taxpayers. They have the high net worth individuals. Today, if you want to create and target, in fact, those high net worth individuals could have their investment income tax and it will not affect them in any way. But not every individual. But until you've mapped out that segment and created a tax regime to deal with them, of course, you would not be able to generalize.
One thing which I keep asking, and I make reference to the UK too, is like you're in a company and then they bring you the sheet. And it's got all the cars in it as a company car. Now, each car, the cost of the car, the company bears, but the tax on it, they take from your wages. So you see somebody driving like a small car, and you wonder, why didn't he pick the Mercedes 500? Well, that's like £4,000 off his wages every month. You know, so you look down and say, no, this is just £100 off my wages a month, and so you go for it. But then I realized that here, if they give you a company car, it's really, free. I mean, nothing.
We have it. It's taxed.
It is supposed to be taxed. At certain levels, you find the thing absolutely ridiculous. You go for a bid. The bid say produce a tax clearance certificate. The guy is going for a multi-million-dollar contract and has brought a tax clearance certificate showing that with hundreds of thousands, sometimes tens of thousands of cedis that's his income, and he's paid a few thousands as his tax. How on earth can you give him that kind of contract? And when we ask for tax clearance certificates, if you haven't declared income, that makes sense for the property you are purchasing. You should not. It's not just deliver a tax clearance certificate. If you're buying a piece of land in airport or in East Legon, and that land is $500,000 or whatever it is at this moment, I want to see you have declared that level of income.
So then there's money in the system.
There is money.
There is. The issue you raise on the vehicles in the Income Tax Act, it's there. When you are provided a vehicle and a driver with fuel, there's a percentage that should be taken from your income, added to it for tax purposes. If it's a vehicle with fuel, or you have your own vehicle and the organization provides you, it's all categorized. If you are provided with accommodation by your employer, the tax element is there. Like you rightly said, supposed to. How many people are religiously following the dictates of the tax law?
That's what
Hence my question on the monitoring, because I believe that the Ghana Revenue Authority should be resourced to always be on the field doing tax audit. I think that is what you find in the US. They say you have the tax officials crawling all over. That's what it means. They don't have to do the debt audit, sitting in the office waiting for returns to be filed. The monitoring, the visitation is key. In fact, if companies realize that on the spur of the moment you would come to check what things are being done, they would comply.
Some of the issues we talk about are so ridiculous. You find the same. We are not even reconciling the social security payments with the tax payments. What happens? Because employees believe they benefit from Social Security. If you don't pay, the employees take you to task. But the employees don't care if you pay the tax or not. After all, even if there's a problem, you are the one who the problem comes to. So guess what? Companies take all sorts of liberties with the taxes they take from the employee's salary and don't pay it. So it's really, the challenge we have is this. This country is broke. Call it any way you like. Dice it, turn it upside down. We are broke. Flat broke. When you are broke, there are only two things you can do. You can either look for an increase in revenue or look for a reduction in your expenditure. Unfortunately for us, 80+% of our expenditure is on salaries and emoluments, statutory payments, and payments on the debt that we have already taken on. There's very little we can do there. Absolutely very little we can do there. So the reason why they keep slapping on tax after tax after tax is, number one, we haven't declared that we are broke. If you haven't declared that you are broke, the TUC will ask you also for their pound of flesh. As we sit in a country where we are as broke as we are and taxing more and more, we have just awarded the unions and the government workers what? Another 10% increment starting from this month. That's because we are not declaring what the situation is. We are broke.
Is it that because of political reason we take the easy way out? Oh, let's raise the tax there. Let's raise the tax here. Because you don't see a lot of strategy in the taxing system. There doesn't seem to be any strategy. Just look, slap a tax on it. And I said that with regards to, I remember once upon a time they put some taxes on mobile phones and then they came back and took it off. And then with the foreign exchange thing again, let's go and take some money from there, and then they take it off. There's not that consistent thing which comes in and stays for a long time. It's just in, out, like Matra Makwe kind of business.
Yeah, talking about the tax on mobile phones, I understand it's been reintroduced, and I'm surprised because the idea was this. If you look at the number of handsets which you can use a proxy, Airtel has how many subscribers? Tigo has how many subscribers? Airtel, add them. Assuming one man, one handset, which is not the case. Some have 5. You get Airtel, hello, MTN, hello, Tigo, hello, put some down, pick another. Some have 5, they have all the lines. And you look at the import duty on handsets, it's nothing to write home about. That is what informed the idea that, look, when the handset comes in, it cannot be used unless it is linked to a network. So what you can do is, if people are bringing it in through smuggling or whatever means, and therefore evading the taxes, let them bring it in for free. So don't conceal, you bring it. But government will wait for you at the end point, hence communication service tax. Because you will be connected. Yeah. And now we'll be taxing you on the duration of your calls. So I don't know who ever thought of reimposing the duty on the handsets. Because you tend to defeat the purpose. So the idea is that if you come, you have to link up to a network. There you cannot hide it. Because they will be billing you and they will be taking the 6% to government. So they need to monitor. How do we get to know that the returns that have been filed as communication service that reflects the duration of the calls? Hence the need for monitoring mechanisms to be able to track the duration of the calls. Now, if you have, like you said, if there is such a policy and you don't carry it through, you have a problem. I keep asking now that at this stage, government should have published for Ghanaians to know when VAT on financial services was imposed, how much did you anticipate? How much did you get? Then we can say it is not meeting the intended target or purpose, then you revise it. But if we don't have any data on that, and we think let's change it and go another direction, it won't work. I have always indicated that if we take off this 1% on investment, take off VAT on financial services, and we sit with the banks, if you think they are making that profit, let's increase their tax rate from 25 to 28%. So if they make the profit, they contribute to that quota. And that all those, because if you bring the VAT on financial services, one thing I've always talked about that it's not prudent. Reason, currently government is planning to implement these point of sale devices. You are already imposing VAT on financial services. And what are those products for which the banks charge a fee or a levy or a charge? The ATM cards and internet banking and all those. So people start delisting from the use of these facilities. What would he need an point of sale device for? This is when he has the card, he will go and swipe to buy fuel, swipe in the supermarket to buy goods, and then you are able to take your taxes at that point. So you can't take from more than one source. Because the idea about taxation is that you need the revenue, but you don't want to distort the market. We've identified one. If you put the 1% on interest earned by individuals, you are getting your revenue, would the market remain the same? Already the financial institutions are struggling with instruments to convince individuals why there's the need to buy this product of mine. If it was that developed, they wouldn't continue introducing more of such products. So it shows that we still have not captured everybody to have their savings habit.
Let's look at the withholding tax and 15% from 5%. That's on services. That's on services, and then down from 5 to 3% on goods. On goods, and then works.
Works 5%.
So works. So if I come and sort of plaster or paint your house,
that's a good question. You know, if you take
a service.
If you take Act 592, Section 84.2 was clear and simple, where a resident person pays another resident person other than an individual for the supply or sale of goods or services or property of any kind, you withhold tax at 5%. Now, if you go down to subsection 4 of Section 84, it was clear that where the goods constitute stock and trade between both parties, no withholding tax. So if you're a stationary dealer and another stationary dealer comes to buy from you, no withholding tax. It's stock in trade for both parties. Secondly, if you're a taxpayer and you show good cause, meaning you are tax compliant, you file director's returns, employee taxes, corporate return, the Commissioner General can issue an exemption from withholding tax, saying nobody should withhold from payment to you. They should give you the full value of your invoice. Now, under Act 896, we have broken them down. Why? Because previously, if somebody is into furniture craft, you ask him to do a set of furniture for you. He'll go and buy the cushions, the material, and he'll pay tax and withhold. He'll come and finish the furniture, deliver to you, and add his service fee. At that point, you are withholding on the invoice value, which will include what he had bought himself. In that case, there was a cascading effect, tax upon tax, saying that if you withhold, you might erode his workmanship. So now the law wants it to be clear. If it is supply of goods, 3%. If it is works, so if the carpenter buys the materials, those supply are goods, 3%. Putting together the furniture for you is works. If you buy tiles, is goods. The tiler coming to put the tiles down is doing works. Unfortunately, Act 896 has not defined works. What constitutes work? That is why you were asking that question. And so other services where we belong, consultants, accountants, doctors, doing locum, all those services would be 15% from 5%, which is very high. My question is, what are the margins in those services?
taxing our troubles away, and that's what we're discussing today. And with me in the studio is Abdallah Ali Nachia, who's a tax expert and legalese in tax. I also have Joe Jackson, who's director of Delex Finance. So he does a lot of investment on our behalf, and we're looking at it. But before we go to the US, let's just clarify something with regards to 15% of withholding tax. So basically, if you provide me a service and I was going to pay you 10 cedis, I need to take 15% of that out of it and then give you the balance. This is assuming that you may have charged. I mean, does it take into account your profit margin?
No, because the withholding tax is on your gross invoice value, and that is why the 15 is very high and needs to be reviewed downwards, because you've not taken into account the net margins, you've not taken into account the cost of the service sector. So if you take 15% on gross and you say you can get a refund, the process of a refund is not that easy. The revenue will want to come and do a tax audit first to confirm, and then the process of refund would start. In most cases where there is no money, they are going to tell you can net it off against your future taxes. That should not be an option. The law is clear. If you have excess, you can claim your refund. And I think that the law should be more stringent on the interest component, because under Act 590 it was clear that if you are due a refund and it's not paid on time, till the point that the payment will be effected, once they confirm the amount of refund, it should start attracting interest at Bank of Ghana discount rate until the last day of payment. And that shows the law's position of trying to help the taxpayer to get back taxes overpaid. In fact, tax refund system is one of the areas that gives confidence of taxpayers in the tax system. In South Africa, you file your returns, you have an overpayment. Within 48 hours, you get a call from your bank. You have a check from South African Revenue Service. Do you want it to be credited to your account, or you want to come and cash it? They pay on your returns and then start the audit. And woe betide you if you got the refund unjustly. The penalties will be severe. So nobody would play with filing false claims. So I think that if we are losing 2% by reducing the withholding tax on goods from 5 to 3, we've lost 2%. Works is maintained at 5%. So if we will maintain services at 5%, we may obviously add the 2 to the 5, and we have 7%. It might make reason why you've made the change rather than a 15%. The argument that it's not a final tax but a payment on account even makes it the more reason why it should not be that high. Because it's a payment on account, it's not final. I would file my returns at the end of... Interestingly, aside the withholding tax, all taxpayers are required on quarterly basis to be paying taxes. If you are in the medium tax and the light taxpayer, on your self-assessed position of what your tax liability would be. If you are in the small taxpayer office, they give you a provisional assessment, what you should pay for the year. And every quarter you are paying, and you are suffering a withholding. So what is taken out of you is bigger. One, it affects your cash flow that you can turn around to make more money and pay more taxes. That is how it distorts the system. And the art of taxation has been said over the years. That is the art of plucking feathers from the goose with little hissing. But if you pluck and the hissing as we have now, of course you have problems with implementation.
15%. So does it mean that if you're going to provide a service now, knowing that the guy is going to take 15% out of my money, look, let me whack that 15% on so that at least I'm not out of pocket?
Now, you've got to look at a number of things. First of all, constantly people are grossing up, even at the 5%. At 15%, they're going to be grossing up. So expect to see an increment in the charges across board. Secondly, the government says that my money, my withholding tax, I have not taken a credit. I have not approved for you to give credit on the withholding tax. So if you do a service, right, your withholding tax is immediately due, whether you got it on credit or not.
So you have to borrow to pay. Tax.
2, let's be realistic. In the real sector, margins are not that high. SME margins are notoriously low, and they are the ones most affected by this. What are we saying? That in the midst of all their pain, suffering from doomsaw, in the midst of all their pain, suffering from increased fuel, in the midst of all their pain, where all prices of utilities have gone up, we're now slapping on this withholding tax, which is going to hit them where it hurts most. It's a tough one. It's a really tough one.
Would you have them review the 15% just like they're looking at the 1% on interest as well?
Oh, they should review it. I think it should be reviewed. If you're going to, listen, it should be reviewed. I mean, think about it. It's gone up by 200%. Whoa. It's gone up from 5% to 15%. It's gone up by, what, a factor of 2? That's too high.
It comes back to the consultation. I mean, what must have gone around the table to say, wow, let's whack this up by? Maybe vendors were hiding something.
And bear in mind, if, and this is a very interesting statement, if the government truly believed that people will take refunds, etc., it will make a difference, because the net, you won't have that so-called interest increase. The government knows that when that money comes, people don't file returns. It doesn't happen. So as soon as that money comes, it's there. Sika kwa infia on sanamba. And that's the approach. Say no correct. Nana me describe how what do you say mama? Nana has put the seal on the matter.
Not just money. Anything
that comes. That's the same problem we have here. So you have a situation where I'm actually surprised in a lot of ways. I thought that the uproar on the service sector would be even higher. What has happened is that because the SMEs typically don't have a voice, because they're the ones that are suffering under this, all that's going to happen is, come tomorrow, when an SME submits its invoice to Delex Finance, and the finance department says, I'm withholding 15%, then somebody's going to start screaming and shouting. But they're screaming and shouting at the wrong person. That finance guy or that accounts guy who is processing your invoice is not the person to scream and shout it. Go and scream and shout at GRA. Go and scream and shout at Ministry of Finance, because you're shouting at the wrong person.
See, I know we're using examples of 100 cities, but there are certain deals that may be 10 million and 20 million.
Let me put it this way. If you are an independent contractor in this organization providing contract media services, watch out. 15% of your money, boom, it's gone. And I thought you would smile at this and say it's okay. I thought you smile at this and say
it sounds scary.
It's true. It's true. Any independent contractor providing services to this multimedia is going to suffer 15%. Yes, and if it doesn't take 15%, it's flouting the law. The effect of this 15% could be even much, much higher than that 1% we've been talking about. Yes.
You think then people are just going to do is say, look, let's do a cash deal. Forget about don't put it in the books.
Easily.
That is the danger. That's the challenge.
The problem with taxation is that when you take it up above certain critical amounts, you are increasing the incentive for people to dodge. Because if I submit an invoice for 1,000 cedis, that's 150 cedis. That's not chicken feed. If my invoice is 10,000 cedis, it's 1,500. Home. Gone.
Let's do a cash deal. Forget about all this.
Let's do a cash deal.
Forget about all this.
Forget all this business. Give me cash. I pay cash. Then where are we going? You see, and sometimes, without wanting to be a challenge I have with all of us who make this commentary and analysis is that we have to watch out that we are not on a constant government bashing agenda. And this year in particular, I said we should be contributing positively to the discourse. And when he came in, I said we should be seeing the cup as half full instead of half empty. But truly, some of these issues, they burn you up, and you don't know what to say, and you don't know what to do. And you ask, who is not thinking? Because definitely somebody is not thinking this through.
After that, the non-banking sector, and I'm talking about this mobile money business. I mean, there's a lot of money moving there. I mean, could the state take 1 CD per transaction from there to minimize costs?
Don't bring your matter there. You have distorted the market everywhere else. Leave the mobile money market alone. In fact, the best you can do is hands off. That market has developed without any intervention from you. Don't come and spoil it too.
That is the one of the no-go areas. Because it was tried. There was an attempt to impose something there. But the issue is this. If you look at the category of players in that sector, talking about sending money to the rural areas, the rural folk, who are barely surviving.
Small plumber who wants his money paid.
Then of course you see the difficulty of taxation is where people think, don't tax me, tax the other man. It's the difficulty of the tax policy maker. We agree.
Look at his car.
Exactly.
He needs to be taxed, not me. I'm working.
Yeah, but you see, in other economies, you have the revenue officers everywhere. You go into a spot, here it is there, Nana enters, oh, Nana, you are here, give Nana champagne. They are naughty, oh, give my boss so. At the end of the day, he has got a bottle of water, a bottle of Coke, observing. And then would go for your tax file and find out. If one night, this is what you spend.
How much do you earn?
How much do you earn? You see? So those are the issues. But talking about the constructive criticism.
Let me just add to that, because I know in the UK, if you earn below a certain, threshold, you have to declare that, listen, I don't earn this amount, because and then the state will then help you.
Sure.
Because you cannot say, I don't have money and I don't need support from the state. It's not allowed.
It's not allowed.
If you earn below, I think those days like £80 a week. If you earn below £80 a week, you have to go to the state for help. Because otherwise,
if they increase from 1,576 to now 2,000 and something. That's the minimum. Below which you are not liable to taxes. Yes. But except in our case, you won't get support from government, but you will not be
But you have to, because if the law caught up with you, you'll be in trouble. Because if this is how much you earn, then how are you surviving?
You cannot, it's not easy to dodge the tax system. That's because I keep saying that tax is the price we pay for civilized society. That's the price we pay for civilized society. So if you want to fall under a threshold where you get government support, then at the time that you are making it contribute, then you make it good to be able to get relief when you are also in need. That for me is the challenge.
I mean, we are rounding up. Let me stay with you. I mean, what should be done? Just widen the net? Is that our only option?
No, the first point, you mentioned it, and it's in the budget over the last 2 years, expenditure management. I've always stated that if you want to wear a suit and your material can afford you the socialist political suit up and down, you sew that. So you sew your coat according to your material, not your size.
Not your size.
Immediately you want to sew according to your size, 3-piece suit, and your material is not up. Corruption steps in. But you have to make ways and means to make up. and appear as you wish to.
Thank you.
That should be done. Now there are free information. For example, cement manufacturers are complaining about the imported cement, specifically from China, the rates.
I have to end here, but I need, like I said, we are going to continue this discussion because it hasn't ended, and I'm sure all throughout this year, the economy has to be, I think you and I have to be educated as to what part we play to help this economy. And so, Joe, thank you very much. Abdullah, thank you so much for coming. But what part do we play to make this work? I remember once upon a time, you look at the Koreas where they're all coming in to donate their gold to help their nation build them out of trouble. What are we going to contribute to build this nation out of trouble? My name is Nana Saka. This has been PM Express, and tomorrow we'll be back to do this all over again. Thank you very much. Thank you, thank you, thank you.